Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com. Welcome to the Friday relaxed morning call. Doesn't seem like it's going to be too relaxing. Just to bring everyone up to speed. Everyone saw the the 8:30 number come out. I think it was 157,000, and we ticked up to 7.9. So it was a little bit of a softer report, but I think it was the type of report that's people are going to be talking Goldilocks. The type of jobs numbers where, okay, they weren't unbelievable, where the Fed's going to have to take their foot off the gas, same way they weren't horrific, where we're getting a gap down and the futures that were up 5-6 handles were taken back. So with that said, it seems like it's going to be a lot of the same. A lot of this, sporadic, very stock-specific type of tape, a tape where you could have a portfolio approach. I know recently, I personally dialed it back a bit, from that low that we saw back in November all the way up into 1,500 and change on the SPX. I think I peaked at like 15 positions, and then I've been trying to hold on average 7 or 8. So that's where I'm at now with the hedge. And I know some guys are complaining like, oh my goodness, I have too much spider on, spider short, or I have too much of a hedge on, and it's taking away from my 8, 9, 10, 11, 12 longs that I would be up making good money as the futures are up 8, 9 handles. But you know what? If we were down 8, 9 handles, you would have been excited. You would have been able to cover your hedges, maybe buy back some stock, continue to manage it. And insurance is always a little bit expensive until you get into some kind of accident or you need it. But anyway, since it's a quick one, let's go right to the chart. Here's where we are on the spiders. You will see here, this was the pivot. This is that 148.11 that we haven't even come back to test. Here is the gap up to start the year that digested it very well before making this nice march to the upside. And then here was the headlines have been we were down 3 out of 4 days. Well, this is your big down 3 out of 4 days. We did close yesterday right on the 8th day, which was a little bit of what could have been perceived as a complexion change, which is one of the reasons why I dialed back some of my positions. But lo and behold, here we are. This is what you have to know, and this is what people are going to be making decisions based on. Here is the high. If you were short and net short and with no longs, and you've been rolling it up this entire time, you know what? This 150.94 is your pivot. Okay, if it gets above it and you want to continue to play this roll-up game that hasn't been working, even since the start of the rally on November 16th, you remember that day when we were in Vegas presenting, you had that red dog reversal, which wound up marking an outside day red dog reversal low with a gap up to show commitment. Well, anyway, here we are. I would have loved to seen a bit more sideways action to have some more stocks set up versus being somewhat extended. But at this point, you can't control the market. It's a new month. There could be some inflows. I'm sure they want to break out the Dow 14,000 newspapers. And what that could be is it could, get people thinking in the public that they missed something, that here we are near all-time highs. How could that be? We're near it when, we had the dot-com bust, we had 9/11, we had the financial crisis last year. Europe was supposed to break up, and then you had China was supposed to crash land, and the Mayans said the world would end. But meanwhile, here we are. So if you avoided the market and you haven't been in the market, people are going to be thinking, oh my goodness, my money could have been better served there if I educated myself and I approached the market with the plan. Well, anyway, as far as today's concerned, let's talk about some tactics. Real quickly, we'll talk about Apple because, I guess Laz was in here yesterday and doing his drawing on here. I'm sorry I didn't get a chance to get in here. He did his, StockTwits Q&A. At this point, it's a little unfair to just draw that, because you don't know if we're going to break to the downside. I am long a little bit of Apple. I'd love to see it start to get above 460, 462 for some type of gap fill, or attempt to gap fill. If it does break below 452, I'm gone, and then maybe you see that. As far as Netflix is concerned, got upgraded by Morgan Stanley. Here's your gap up on earnings. Nice tight flag. If it were to get above yesterday's high of this 169, it could try and make an attempt to take out this area. So this, could and should be on your radar. Google, best in breed, or one of them, holding higher. I know we've been trying to hold it, and it had a faulty breakout 2 days ago, but then held in there really well. If it can get above this 760, 761 with some type of authority, it seems like it's just a matter of time before it takes out 774. DELL, there's some news out there that it could be taken out, Monday, Tuesday of next week. The prices that people are talking about are between 14 and 15. I am still long it. It's given us some nice trades. This was a really nice surprise in January. Sometimes some stocks come on the radar, they act well, you make some cash flow, and that's why we're in this business to be involved if it shows its face. And Facebook yesterday was a really nice trade for some of us. We've been watching this thing. It was in our 2013 thesis that it could see 32 to 34. It did happen sooner than we thought. This was a nice little breakout trade, and then here was another nice breakout trade, and then it's been getting a little sloppy, but that's what happens after a big move. So all in all, yesterday you had two nice trades, or actually yesterday and the day before. One during after hours. If you come back to me with the camera, if you're seasoned enough to trade after hours, Mark was talking about it when it was down in the 28 level. He played it, I played it. It went positive after hours, which was nice. So you got cash flow for being in there if you knew your levels. And then we walked in yesterday and we were still, and it was down almost, $1.50, and it was like, okay, maybe last night was a fluke. So we tried it again and it wound up holding up all day long, going positive, and it was another nice trade. So to me, looking at this chart, after all the analysts tried to, raise expectations so high and almost make it into a faulty looking chart, the chart repaired itself and now you go back to it. To me, it looks really good. Okay, we will have to probably, do some kind of consolidation within this area. I think holding some in the drawer is somewhat, prudent. And if it starts to get above this 2-day high, which is, 31.49, it might take another day or so, then we'll be on our road back to the highs here. And then if you take a more macro look at Facebook, you'll see that, the chart is trending better. There is resistance right up here. That's your next level, about 34. So we'll see, how long we have to spend in this upper channel. I remember after this move, this took a little while before going again. So, I would stick with it. LinkedIn's coming out with earnings next week. I'm in a call spread. I still think ultimately that this stock has the ingredients. Okay, I've talked about this last year. Last year I went over three things real quick. Last year I talked about 3 IPOs with enough franchise power, so to speak. You could put them in the drawer. Sometimes they're tough to trade. You have to have some risk tolerance, and it was Coors, LinkedIn, and Dunkin'. Okay, LinkedIn, one of them. So you go back to the chart of LinkedIn and you will see, overall, it's been public almost for, 18, 19 months. It tried to push through a little bit, couldn't get going before earnings. All in all, really nice, cup, handle or channel type pattern where it seems to me that if they deliver this quarter, I don't know if they do it this quarter, next quarter, this stock should be a $140 to $145 stock or more. A lot of new issues that, come to fruition within the first few years, they start to break out, and that's where you get some nice alpha. We've seen that with Coors, Coors itself, from when it came public all the way to where it is now, it's been a heck of a move. So if you caught it early, you've been doing really well. Lately, to trade, it's been a little erratic, but all in all, you had a big gap up. I know a lot of guys were looking at it for a trade right around here. You had a breakout failure, but it's still overall hanging tough. And if you put it in the drawer, congrats. And I know I haven't spoken about Dunkin' lately, but Dunkin', we talked about it being a little bit McDonald's, a little bit Starbucks, a little bit of a lot of things. But meanwhile, again, here's a new issue that came public. Last year it was like a little bit more calculated for us because it was tight. This is when it broke out, above this trend. I think we traded it. Here was another nice move, when it broke the IPO highs. And then once it got faulty here, I kind of lost track of it. But for investors or macro investors who stayed the course, it went to almost as high as 40. And I do think that this stock could probably go higher over the course of the next few years, and something you could forget about, because they make money, brand recognition, they're expanding everywhere. They give you a dividend. It's something that, doesn't really trade well for us, but for investors, it does seem like with a long time horizon, you could be good with it. As far as the banks have been kind of consolidating. Goldman and Morgan have been the best of breed. You look at Goldman, you'll see that recently it's really provided really nice leadership. Ever since it broke above this 121, it's been on the move. It had really nice earnings and responded well to the earnings. And here we are breaking the highs again, following the 8-day moving average this entire time. Morgan came back to life. Way back when, it triggered also right around here, around 17. It started to regain its 8-day and track it all the way up. And then on, here on earnings, I think you had a really nice gap up, and it's hovering near highs. I guess for cash flow, this thing gets above, 23-ish. It could continue. I guess let's go to the weekly chart and see Morgan where it can go. The 200-day on the weekly comes in at 24.46, so it still has room. Bank of America and Citigroup are trying to, they've been a little bit more erratic, but they also had a much bigger move. So they've been consolidating it, and here is when we got really excited about this one below 10. Here is your bull flag type pattern. This is when the accelerated trend broke. So for those of you who wanted to get out of the way, okay. But now it's been basing above 11. You have a bit of a downtrend that you could trade it against. I did get back long it within this little time frame, and if it starts to get above, just say 1172, and the market wants to continue, I think this one gets back on course the same way. Citigroup, had a really nice run. Here is your gap up, still well above that gap up. You have a small descending channel right here too, as it's been trying to base and consolidate what's been a really nice move. Remember this day, that was a day to notice, a day to take notice, a day to make money here too. And since then, it's been a little choppy, but at some point, this might move again. I would say above, just say 42.60-ish. It could get back going, and then you have the old highs here. And then, some groups and some stocks, a lot of that I know I haven't been focusing on, which I apologize. The refiners, the OAHs started to really step it up. XLE started to go. The transports had an unbelievable month with the Russell. So there's been a lot going on in a lot of different places. So don't feel trapped with one set of stocks. Try and, move around, expand your horizons, figure out how you can make other money by maybe holding more positions, a little less size, diverse groups, and just keep doing that until it changes. And then hopefully, we'll find some stocks that treat us well, give us momentum, where you could buy high and sell higher. But, that's been a little hard to find, so it's been a bit frustrating because those of us who like tech, and obviously Apple or some of the few, which, if you think about it in perspective, the NASDAQ was up 4% or so in January. The first day was up 3.1%. So the first day, 3.1%. For the next 20 sessions, it tacked on a total of 1%. So there wasn't really that much opportunity. So if you feel like you didn't perform and you didn't want to take longs into, a new year, because who knows what could have happened. I know we were talking about the fiscal cliff there and all that kind of scenario. Don't beat yourself up too bad. Some of the other indices gave you a little bit more follow through than tech, but that's why you have to find the relative strength and the nice chart patterns and keep moving around. But overall, we have 11 months left. There's going to be a lot of time, a lot of trading, a lot of good things going on. So just brush it off, go into the weekend, enjoy the Super Bowl. I'm rooting for San Francisco. If I was a betting man, I would take them, and give the points. But I'm not a betting man. I'm a calculated risk man, and I don't need to bet on football games, but I'll watch it and eat and have some fun with my family and friends. I bet every now and then anyway. But with that said, I hope your box comes in. I hope you make some money today. And just relax. It's the end of the month, and you'll figure out how to switch some gears and put another one together for February. Have a great weekend and have a great day trading.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.